Hi, this is Matthew Cratter from Trader University, and today I want to talk about how I went from being a Tesla bear to a Tesla bull. If you're interested in seeing what I'm trading or investing in, or just want to see how to make money in this market, be sure to hit that subscribe button. So many of you who have been following my channel for a couple years know that I have been a long time Tesla bear. I was bearish on Tesla for all of 2019, and this worked very well for the first half of the year. I owned some Tesla puts, and they were making really good money. Then obviously the second half of 2019, Tesla stock went up a lot. Fortunately, I was protected because I just had puts and put spreads. Obviously lost money on them. I used to actually still own those puts until yesterday when I sold them and went long a small investment position in Tesla. So let me talk a little bit about my thesis, my old thesis, and how it has changed as the data have changed. So I've never doubted or disputed that Elon Musk is really the Thomas Edison of our age. I can't think of anyone like him in that respect, in terms of having just a huge number of very, very creative ideas, as well as being very smart at business and being smart at making things. This is a very rare combination. I believe Musk majored in physics and business when he was in college. And he was also obviously a physics grad student, at least for a short time, at Stanford. I've always enjoyed listening to Musk, especially his Joe Rogan interviews. It gives you a real feel for the person. And so it's never been a problem. I've always said that I do like Musk personally. But my basic thesis was that Tesla will not survive the next recession. Obviously, this turned out to be wrong. We can see from the stock price here, the stock chart, that Tesla has done quite well. It originally did sell off during the liquidity crisis phase of this financial and COVID crisis. But of course, everything sold off then. Treasury sold off, gold, Bitcoin, stocks. And subsequently, it has rebounded really nicely. It has not been behaving like a car maker. It's not been behaving like some of the stocks that have been impacted by COVID. In fact, it's behaving much more like a tech stock. This chart looks much more like the QQQs or the FANG stocks. So the first thesis was wrong. Tesla definitely has survived, and it's up significantly. So that was part of the thesis. The other three parts were these. Lots of competition is coming in the works from other car makers. Now, this just simply turned out to be wrong, and I made a mistake here thinking that traditional companies like Ford and General Motors and BMW could compete against Tesla. We just saw some news that BMW has canceled its plans for the Vision M Next. It doesn't look like anyone's going to be able to catch Tesla, and this makes sense simply because the car companies we have, the car companies that have survived, and this has been a difficult business. One of my arguments was that every car company that's ever existed has filed for bankruptcy, with a couple rare exceptions. I think it was Ford and Tesla. Ford came very close, and I believe got a bailout in 2008. But these are legacy companies, and they have to deal with a lot of politics. These are very big, bloated companies. They have to deal with unions as well. I'm not necessarily against unions. I understand the reasons for them. But all I'm trying to say is that these traditional car makers are not flexible. They don't move fast and break things, as Zuckerberg is fond of saying. And they're like the QE2. Their turning radius is very wide and very slow. And so they're not able to really adapt to new tech very quickly. And this makes sense if you look at, not to pick on anyone, but you just look at who the CEO of Ford is. He's an old football player. He has a bachelor's degree in general studies. He's probably a very good people person. I obviously don't know him personally, so if I'm getting this wrong, please forgive me. But you can't compare someone like this to someone who has a real engineering and physics background, like Elon Musk. A lot of these traditional companies, they're just run by guys who want to collect their stock options. And so they have different motivations. I'm not sure that, again, I don't know him. I don't want to do character assassination here. But I don't think Jim Hackett wakes up in the morning and his number one goal is to get to Mars or get to the moon or to generally change humanity. And I do believe that that's genuinely what drives Elon Musk. And so in many respects, Tesla really doesn't have any competitors. It's the largest company of its kind doing its own thing. And these other companies are legacy businesses. They're very slow moving, and they're going to have a very difficult time catching up with Musk and Tesla. And this is one of the advantages of doing hard things. Anyone can start a car company. I mean, anyone can start a software company, I was going to say. But to start a car company, to start a rocket company, that's really insane. That's really, really difficult to make things in the real world. And so a lot of Silicon Valley types, they rather focus their energies on making an app or something that's fairly doable. But Musk takes on these really hard problems. And one of the advantages of that, the disadvantage is you can fall flat on your face. And this could still happen with any of Musk's companies, so I think it's unlikely. But the advantage of that is you don't have a lot of competition. If you're a rocket company, you're competing with NASA, which has been very stagnant for many years, you've got a real advantage if you can make it work. And Musk has shown that he can make it work. So I don't think Tesla has a lot of competition, certainly not from the traditional space. Now here's the real crux of my old thesis. Tesla has made most of its money selling debt and equity, so issuing bonds, issuing stock, and it hasn't made its cash flow from selling cars. Now this is true if we look at the numbers. Oh, I was going to say, let me just rewind really briefly here. So one of the advantages that Tesla has over a company like Ford or General Motors or even BMW is that if you're a new smart grad just out of college or out of graduate school, you're a developer or an engineer, you're definitely going to go work for Tesla if you're interested in the car space. And you want to sort of be on the cutting edge of things. You much rather live in Palo Alto or Fremont rather than Detroit. Again, nothing against Detroit, just the weather's better in California. California has a better brand than Detroit. And also, you're going to be in a very fast-moving company and not really kind of a legacy, more slow-moving company. So that's to complete the thought of why Ford is going to have a lot of trouble. And General Motors, and not to pick on Ford, but all the traditional legacy car makers. So now what about the argument that Tesla has made all of its money selling bonds and debt? Well, this is true in terms of its cash flow. So if we look at the balance sheet here, we can see that their long-term debt was about $6 billion at the end of 2016. At the end of last year, at the end of 2019, it's risen to 12, almost $12 billion. So they've been issuing more debt in order to raise money, in order to raise capital, to build factories and pay people and do all this stuff. They were very lucky, by the way, that they were able to sell, I think they sold $2 billion worth of debt right before this COVID crisis hit. And so they had a lot of cash in the bank and were able to not have a liquidity crisis of the type that I was worried about before. So they've been issuing debt. That's how they've raised money. They've also been issuing new stock, which does dilute current shareholders. So back in 2016, they issued, I think, $1.7 billion worth of stock. And it's been less over various periods. But we can see that they're still issuing a lot of stock last 12 months. I'm not sure this is a net number, 3.1. That seems a little bit high, but it may be true. But the whole point of this is just to demonstrate that they're not making their money from free cash flow. The free cash flow numbers, they finally went positive last year, about $1 billion. But this is dwarfed by the amount of debt and equity that they issue. So that this is basically the business they're in. They've been raising capital through bonds and through debt. Now, this was a main concern of Tesla bears and Tesla bulls. So what happens during a financial crisis is it becomes very difficult to raise money. They say the capital markets close for you, and so you can't sell stock, you can't sell debt, and you can basically starve to death if you don't, especially if everything's closed as it is now. But we've seen that this just hasn't happened. And then there's been a really profound, so this is the fresh funding that, so they did issue, it was actually issuing stock back in February of 2020. So I think this number is correct. That's just amazing. They've issued $3.1 billion worth of stock in the last 12 months. That's how they're raising money. Now, raising money, especially having junk bonds as Tesla used to have, is a problem. But it's not a problem when you have the money printers. Sorry about the noise. So this is something that's changed. The Fed has now committed to basically printing as much money as they need to prop up asset prices. They're not saying it exactly that way, but that's my interpretation. They're printing money and they're buying everything. They're not just buying treasuries, they're not just buying munis, but they're buying junk bonds too. And so what's very interesting is if you look at the kind of junk bonds they're buying, I don't think they're allowed to buy junk bonds directly. So what they're doing is they're buying junk bond ETFs, in particular HYG and JNK, high yield HY and JNK as in junk bonds. So if you go in and look inside of these ETFs, you can see that Tesla's bonds are actually in there because they trade as high yield bonds. And so they're a very small part of the ETF. This is the HYG ETF, the bond ETF. It's only 0.21. So it looks like they have about $46 million worth of this bond in the complete ETF. But we have a really weird situation here where the Fed is printing money and they're literally buying Tesla bonds. They're literally making it safe to invest in Tesla. Because if Tesla is not going to go bankrupt, issuing so much debt and issuing high yield debt, if Tesla's bonds have a put from the Fed, if basically the Fed is going to insure you, their equity is worth a lot more than I ever would have guessed. Because you basically have a call option on the future of the company. In this environment of money printing, Tesla has unlimited money. They can sell stock and they can especially sell bonds. And in the coming environment, it looks like the Fed's just going to need to keep buying. They're going to need to keep buying corporate bonds and even junk bonds. And this is one reason that the stock has rebounded so quickly and so furiously since the Fed announced that they were buying junk bonds. Because they're basically saying, even though Tesla bonds are a very small part of this ETF, the general message from Jerome Powell is that we're not going to let anyone go bankrupt. We're certainly not going to you could argue that Tesla at this point is sort of a national treasure. It's one of our more forward-looking companies. U.S. government cannot let Tesla go out of business. And so their bonds have a put, which makes their equity worth a lot more. And so as a result, Tesla imagine Thomas Edison with unlimited money. If you have a guy who just loves inventing, he loves building things and building companies, the only constraint is his health and the amount of money he has. And so Elon Musk is still relatively young. I assume he's healthy. But he's basically Thomas Edison with unlimited funding because the capital markets in the U.S. are much deeper and wider than they've ever been, and certainly more deep than they were in Thomas Edison's day. Now, in addition, simply because Tesla's got as big as it has, and it's almost been profitable for 4 quarters, the S&P 500, in order to be included in this index, you have to have an accumulated profit over 4 consecutive quarters. Tesla has it over 3 quarters, and it looks like they're going to be able to do the 4th quarter this second quarter. And this article from the Wall Street Journal is speculating that one reason Musk was so eager to open up the Fremont factory was to get the car production going so they could show profit for this quarter. And if they can do that, what's going to happen is you're going to have huge flows of institutional money, of retail money, of index money into Tesla. Basically, if you own an index fund, it's going to be forced to buy Tesla stock. Doesn't matter what the PE is, doesn't matter what the market cap is. Tesla's big enough now, and if you can just pull it off this quarter, you're going to have huge flows into the stock. So as a result, you have the Fed propping up Tesla's junk bonds. You have the possible inclusion in this index propping up Tesla stock. What this means is Elon Musk has unlimited money going forward. Now, obviously, if he issues too much stock, it could really dilute existing shareholders. But the company is still relatively small for a tech company. I believe its market cap is about 150 billion. And so you have these two flows from the Fed and from index funds probably coming. Now, this may not happen. We'll see. But if it happens, it really is another form of a put under Musk stock. Now, in addition, so I guess the last point, we've covered all the points. So Tesla does make most of its money selling debt and equity. But if you give it a long enough runway, you give it enough money, they can actually make money selling cars. and doing other things. Now, my final part of my old thesis was that Tesla is a car company, which was sort of wrong. Obviously, they are a car company. Car companies, manufacturing cars has traditionally been a bad business. It's low margin. You have to deal with a lot of politics. You have to deal with unions. It's very capital intensive, and it's also cyclical. And as a result, this is why so many car manufacturers have gone out of business. But in this world of new tech, it's beginning to look like Tesla may be pulling off something different, which I missed. People tried to point it out to me, but I did miss it. That Tesla is really benefiting from what all the modern tech companies like Facebook and Google benefit from, which is network effects. The more people who are participating with your products, the bigger the network grows and the more powerful. And this can serve as a competitive advantage, as an investment moat for the company. So obviously the charging network is huge. This is very difficult to reproduce. And this is a map of all the different charging locations in the United States. But I think there are more network effects coming. I was skeptical of these simply because I thought that Tesla would run out of money. I didn't foresee that the Fed would be printing trillions of dollars. And I didn't think Tesla could survive another recession. And if you can't survive a recession, you're not going to be included in the S&P 500. But now that Musk seemingly has a unlimited runway, I think he can actually do what he wants to do. I think he's sincere about this. I don't think he's a scam artist. I think he does want to have robo-taxis. I think he does want to build a whole freight network on top of his car network. And so when you get rid of drivers, this is really a huge business. And it's going to be unfortunate for truck drivers, but this is where the economy's headed. There's going to be a lot of robots replacing human jobs in many industries, but certainly in trucking. And Tesla really has the network effects and has the first mover advantage to take advantage of this. I'm digging a little deeper in this. I hope to cover it in another video if you guys are interested. But robo-taxis, becoming a freight company, these things are really huge, and Tesla really doesn't have a competitor at this point in these areas. So the final objection I can imagine people saying is, why would you want to buy the stock here when Musk himself said that the stock is too high? I think he said this, he said it on May 1st, so the stock was approximately 700. So I currently own it. I currently own the stock at about $808. It's a small position. I'm not going to be trading around it, and much smaller than my Bitcoin position, for example. But I think Tesla stock at this point it's a call option. You're protected on the downside. It's very unlikely that Tesla ever sees the 400s or 500s or 600s again. I'm not going to be trading around this. I'm just going to be holding it. But you basically have a call option on this future. So why would Musk say his stock price is too high? Well, we'll talk a little bit about the valuation in the next slide. But I think as someone who's traditionally been accused of pumping his stock, let's say you've been accused of being a stock manipulator, the fastest way to prove to people that you're not is to, who drives their own stock down? Penny stock manipulators may do this so they can buy more shares. Musk can't drive the stock down in order to buy more shares. It'd be just too transparent. Everyone would watch. In fact, his compensation is really tied to the stock's performance. But this is a really good argument if he's ever in legal trouble to say, look, I made my stock go down 10% in one day. So if you were Elon Musk and you wanted to show that you also made your stock go down instead of going up, you would pick the safest time to do it. You're certainly not going to do this in the dark times of 2019, where if your stock goes down, you can't raise more money, and this business the company's going to go out of business. But Musk must have thought that this is a safe time to do it. Maybe he thinks the stock is slightly overvalued. It may just be fairly valued at this point. But it's certainly not something that I want to own puts on, that I want to be short, because I think I misunderstood some things, and then some things have changed in terms of the funding by index funds, and the funding by the Fed. So let's look briefly at the valuation of Tesla. Now, traditionally, car companies are valued as a fraction of their revenues because it's a very low margin, capital intensive business, as we said. So last year, General Motors, GM, had revenues of about 137 billion, and their market cap is just a fraction of that. Same for Ford, revenues of 156 billion, market cap is much smaller than that. Now, tech companies usually trade at a positive or a multiple much greater than 1 of their revenues. So for example, Facebook trades at 8 times sales. Now, Facebook is obviously much more of an online business. They don't have big factories. They don't have to source components from China, etc. They're much more capital intensive. So maybe Tesla should not trade at a price to sales of 8x. But if we look at where it's trading roughly right now, I believe in 2019 they had revenues of 26 billion. Obviously, the revenues have been growing really, really quickly. They're going to be able to grow much more quickly as well, with simply because there's really no competition. If you want a really nice phone, you buy an Apple phone. If you want a really nice electric car, you buy a Tesla. There's no competition. And so they're currently a market cap of about 152 billion. So they're trading at 5.8 times sales. The market is valuing them as a tech company. It's not valuing them as a fraction, less than 1 of revenues or sales, but as a multiple of sales. So I can't tell you whether they should trade at 4 times, 5 times, 10 times revenues or sales. They probably should not trade at a higher price to sales than Facebook, but this seems reasonable. Maybe they should only trade at 4 times revenues. It really depends on how much you think future profits are going to be driven, because obviously sales only matter to the extent that you can squeeze net income or earnings out of them. Facebook, Microsoft, Google can squeeze a lot of earnings out of $1 of sales. Tesla is selling cars, their net margins are not that great. But if you take into account these future plans, robo-taxis, these sort of network effects, you could have a situation where it's sort of a razor blade model where they give you the car for free or at a very small profit margin, and then they have different ways of monetizing the network. So I think the market's right to value Tesla as a tech company. This is something I missed. I was valuing it as a car manufacturer. So even if I believe that revenues were going to grow a lot, I believe that the market cap should be much lower than those revenues. And so that's another mistake that I made. I'll go a little bit more into these network effects in a later video. But I think to conclude that what we have a situation where we have the Thomas Alva Edison of our day. He is, I don't think he's any longer driven by money. Obviously, everyone wants more money, but he's selling all his houses. What I really took away from the latest Joe Rogan interview is that this is a guy who really wants to get into outer space. He realizes his mortality, and he's really focused on, rather than accumulating a bunch of stuff, he's really focused on his businesses and really taking a leap forward with SpaceX, Tesla, the Boring Company, Neuralink in particular is just a fascinating company where you'd be able to control stuff using your brain and also to cure various brain injuries. So I think you have someone who's like Thomas Edison. We don't have a James Hackett here. We have someone who's not really driven by money, or he uses money to accomplish his goals. And imagine giving Thomas Edison unlimited money. Musk can certainly, there are constraints on his time. He only has 24 hours a day like the rest of us, but he doesn't seem to sleep much, and he seems to be incredibly productive. So I think if you combine a Thomas Edison type with someone with unlimited financing from the Fed and from the public markets, you have the recipe for an amazing call option. I don't know where Musk is going to take this, but I think it's definitely not a company that I want to be short. Maybe you can short it tactically. You think the summer stocks are going to be weak, the virus is going to reemerge, etc. I'm not talking about a trade here. I'm talking about a 10-year investment. And in 10 years, I think the company will be worth a lot more than it is now. I think it will have a much higher market cap than it does now, which is why I've taken a position. I bought shares at the close at about $808 a share. Again, this is a risky investment. Things could go wrong. If something happens to Musk, heaven forbid, if he gets cancer because he doesn't sleep, if he sort of leads a schedule like Steve Jobs running these multiple companies, he could end up with some health problems from his lack of sleep, heaven forbid, but we hope that doesn't happen. We hope he has another 30 or 40 years here to really contribute to humanity. And so I think what you have here is the stock is a perpetual call option. I don't think there's a lot of downside. If this goes down to $600 a share, I'm not selling it. It's a small position that I can ride. Certainly not as big as my Bitcoin position. I think Bitcoin, you make 100x on your money. Maybe this stock you make 10x in 10 years or 5x in 10 years. But I think it's interesting. I bought a small position so I can continue to follow it. Now, obviously I was wrong to be bearish on Tesla. I was wrong. I was bearish at the wrong time. Maybe I'm bullish at the wrong time. So let me know in the comment section below, and hit that subscribe and like button if you found this video helpful or thought-provoking. Thanks a lot for listening, and I'll see you in the next video.